Bitcoin has shattered expectations once again. The digital currency has surged to a new all-time high, reaching $90,000. This milestone marks a significant moment in Bitcoin's history, captivating the attention of investors, institutions, and the general public alike. The price surge has sparked intense debate. Is this a speculative bubble on the verge of bursting, or are we witnessing the birth of a new financial paradigm? Bitcoin's journey has been marked by periods of extreme volatility and spectacular growth. From its humble beginnings in 2009, Bitcoin has evolved from an obscure technological experiment to a global phenomenon. Its decentralized nature, operating independently of central banks and governments, has attracted both praise and criticism. The recent price surge can be attributed to a confluence of factors, both technical and fundamental. Understanding these drivers is crucial for anyone seeking to navigate the exciting, yet often unpredictable world of Bitcoin. In the following sections, we will delve into the forces shaping Bitcoin's trajectory and explore the potential implications of this digital revolution. The unexpected victory of Donald Trump in the 2016 U.S. presidential election sent shockwaves through global markets. This political earthquake, coupled with growing economic uncertainty, fueled a surge in demand for Bitcoin. Investors, seeking safe haven assets amidst political turmoil, poured into Bitcoin, perceiving it as a hedge against traditional financial systems. Bitcoin's decentralized nature resonated with those disillusioned by centralized power structures. The digital currency, operating outside the control of governments and financial institutions, offered a sense of autonomy and protection from political interference. The Trump presidency, characterized by unpredictable policies and escalating global tensions, further solidified Bitcoin's appeal as a decentralized and censorship-resistant asset. The political climate surrounding Trump's presidency created an environment ripe for Bitcoin's growth. The uncertainty and distrust in traditional financial systems exacerbated by Trump's policies propelled Bitcoin into the spotlight. As investors sought refuge from political and economic volatility, Bitcoin emerged as a digital safe haven, attracting a new wave of supporters and fueling its price surge. Technical analysis provides valuable insights into Bitcoin's price movements, revealing patterns and trends that can help predict future market behavior. By examining charts, trading volume, and other technical indicators, we can gain a deeper understanding of the forces driving Bitcoin's momentum. One key indicator is the moving average, which smooths out price fluctuations over a specific period. The 200-day moving average, often used to identify long-term trends, has consistently acted as support for Bitcoin's price, indicating a strong bullish sentiment. Furthermore, the Relative Strength Index, or RSI, a momentum oscillator, signals whether an asset is overbought or oversold. Bitcoin's RSI has recently reached overbought levels, suggesting a potential for short-term corrections. Trading volume, another crucial metric, reflects the intensity of buying and selling pressure. The recent surge in Bitcoin's price has been accompanied by a significant increase in trading volume, indicating strong market participation and reinforcing the bullish trend. Additionally, open interest in Bitcoin options, which measures the total number of outstanding contracts, has reached record highs, reflecting growing institutional interest and expectations of continued price appreciation. Beyond technical analysis, understanding Bitcoin's intrinsic value requires delving into its fundamental properties. Unlike fiat currencies, which can be printed endlessly by governments, Bitcoin operates on a fixed supply schedule. Only 21 million Bitcoins will ever exist, ensuring its scarcity and protecting it from inflation. This inherent scarcity, combined with Bitcoin's growing adoption as a store of value and medium of exchange, underpins its fundamental value. As demand for Bitcoin continues to outpace its limited supply, basic economic principles suggest that its price will rise. This fundamental scarcity differentiates Bitcoin from traditional assets and contributes to its appeal as a long-term investment. Moreover, Bitcoin's decentralized nature, operating on a global network of computers, makes it resistant to censorship and manipulation. This resilience against external control further enhances its value proposition, particularly in an increasingly uncertain world. As we move forward, understanding both the technical and fundamental factors driving Bitcoin's growth is crucial for investors and enthusiasts alike. Section 5. Regulatory Landscape. Navigating the Uncertain Future of Bitcoin. Bitcoin's rise has not gone unnoticed by governments and regulators worldwide. While some countries have embraced Bitcoin, creating favorable regulatory frameworks, others remain cautious, grappling with its implications for traditional financial systems. The evolving regulatory landscape presents both opportunities and challenges for Bitcoin's future. In some jurisdictions, governments have implemented clear guidelines for Bitcoin businesses, fostering innovation and attracting investment. For example, the European Union has provided regulatory clarity, classifying Bitcoin as a commodity and exempting it from VAT. Similarly, Japan has recognized Bitcoin as a legal payment method, encouraging its use in retail and online transactions. However, other countries have taken a more cautious approach, imposing restrictions on Bitcoin trading or outright banning its use. China, for instance, has cracked down on Bitcoin exchanges, citing concerns over financial stability and capital flight. The United States, while not outright banning Bitcoin, has implemented strict anti-money laundering and know-your-customer regulations, which some argue stifle innovation. Section 6. The allure of institutional investment. Wall Street embraces Bitcoin. Once relegated to the fringes of finance, Bitcoin has gained increasing acceptance from institutional investors. Wall Street giants, once skeptical, are now embracing Bitcoin, recognizing its potential as an alternative asset class and a hedge against inflation. This institutional influx of capital has been a major catalyst for Bitcoin's recent price surge. Major financial institutions, including Fidelity Investments and JP Chase, have launched Bitcoin-related services, providing custody solutions and trading platforms for their clients. Furthermore, Square, the payments company led by Twitter CEO Jack Dorsey, has invested heavily in Bitcoin, holding it as a treasury reserve asset. The entry of institutional investors brings legitimacy and liquidity to the Bitcoin market, attracting more traditional investors and fueling further price appreciation. As institutional adoption continues to grow, we can expect to see more sophisticated financial products and services emerge, further integrating Bitcoin into the mainstream financial system. Section 7. Bitcoin and the future of finance. A decentralized revolution? Bitcoin's meteoric rise has ignited a broader conversation about the future of finance. Its decentralized nature, operating independently of central banks and governments, challenges the traditional paradigms of money and value transfer. While its ultimate impact remains to be seen, Bitcoin has the potential to revolutionize the way we think about and interact with money. One of Bitcoin's most profound implications is its potential to bank the unbanked. Billions of people worldwide lack access to traditional financial services, often due to geographical limitations or socio-economic factors. Bitcoin, accessible via the internet, empowers individuals with a secure and borderless means to store and transfer value, regardless of their location or financial status. Furthermore, Bitcoin's transparent and immutable ledger, known as the blockchain, offers a new model for trust and accountability. Transactions recorded on the blockchain are permanent and publicly verifiable, reducing the need for intermediaries and mitigating the risk of fraud. This transformative technology has the potential to revolutionize various industries beyond finance, including supply chain management, voting systems, and digital identity. Section 8. A word of caution: risks and volatility in the Bitcoin market. While Bitcoin's potential is undeniable, it's crucial to approach this emerging asset class with a healthy dose of caution. Bitcoin's price is notoriously volatile, subject to rapid fluctuations that can catch even seasoned investors off guard. Understanding the inherent risks is essential before making any investment decisions. Bitcoin's value is driven by supply and demand, which can be influenced by a myriad of factors, including regulatory news, technological advancements, and market sentiment. This volatility makes Bitcoin a high-risk, high-reward investment. Investors should be prepared for significant price swings and avoid investing more than they can afford to lose. Furthermore, the Bitcoin market is still relatively young and evolving. While security has improved significantly over the years, the risk of hacking and theft remains a concern. Investors should take necessary precautions to secure their Bitcoin holdings, such as using hardware wallets and enabling two-factor authentication. Section 9. To buy or not to buy. Advice for newcomers to Bitcoin. The decision to invest in Bitcoin is a personal one, dependent on individual financial circumstances, risk tolerance, and investment goals. Before diving into the world of Bitcoin, newcomers should thoroughly educate themselves about its underlying technology, potential risks, and potential rewards. Start by learning the basics of Bitcoin, how it works, and its underlying principles. Explore reputable resources, such as the Bitcoin White Paper by Satoshi Nakamoto, online courses and educational videos. Understanding the technology behind Bitcoin is crucial for making informed investment decisions. Next, determine your risk tolerance and investment goals. Bitcoin's volatility makes it unsuitable for those seeking short-term gains or who are uncomfortable with the potential for significant losses. However, for long-term investors with a high-risk appetite, Bitcoin can offer the potential for substantial returns. Remember, investing in Bitcoin is not a get-rich-quick scheme. It requires patience, discipline, and a long-term perspective. As with any investment, diversify your portfolio, conduct thorough research, and never invest more than you can afford to lose.